Hey, what's going on, guys? Thanks for tuning in to this week's episode of ACM Insider. Today, we're talking with Josh Friend, who is the founder and CEO of Insellerate, which is an incredibly powerful CRM platform that helps lenders close more loans through intelligent borrower engagement, such as omni-channel marketing through text, social, email, dynamic lead routing, and much, much more. So that being said, Josh, thanks for joining us. How's it going today, my friend? No pun intended.
Doing great, Corey. Thanks for having me.
Yeah, so let's go ahead and just jump into this, Josh. I'm sure a lot of people have heard of you, have heard of Insellerate. Let's get started with some of the basics. So for the few people who may not know who you are and may not know who Insellerate is, can you give us a little bit of your backstory along with who Insellerate is and how you guys are positioning yourself to really be one of the key leaders in the from a CRM platform standpoint?
Yeah, no, absolutely. I mean, I think core to Insellerate, I think one of the fundamental foundations of us is our business model is we're not necessarily a tech company. We're in the business of helping lenders close more loans. Yes, we have technology. We're great at building technology, but that's like the driving force behind us. And that really comes from my own background. I was a lender. I started off as a loan officer in '99. Started my first mortgage company in 2003. I've had several successful mortgage companies, and understanding when you're running a mortgage company, really the ultimate goal is, you have to do good, do well, and then to close more loans and increase production. And there's just a lot of different things that we can do, lenders can do to help with that. So that's really a kind of driving points. How do we help lenders close more loans? How do we make them more successful? Now, obviously, we use technology around that, right? We have a lot of technology we use around that. We think that our technology helps lenders close more loans, but really that's just driving force of us is, helping lenders, is service, right? It's, the mortgage industry is what sometimes we fail to realize is we're in the service industry.
Right. Exactly. Yeah.
It's not,
Yeah.
the term a loan officer kind of scares me because that person's not really isn't decide whether or not you get the loan.
Right.
They want you to get the loan. They're
Yeah.
really like a loan consultant, and we're in the service industry, and I'm in the service industry. So it's all about serving. We have to serve lenders, and lenders have to serve customers. And by serving them, they give them more, give them loans. That's been our business.
Yeah, I couldn't agree with you more. That's one of the reasons why at ACM, we really position the loan officers to be the quote unquote the guide, making the customer the hero of their home buying journey. And I think that that's something that is becoming more and more prevalent as time goes on, particularly as the customer journey is continually changing and evolving. Maybe at one point you could kind of go through and just rely on your technology, but nowadays it's not like that. I mean, you really have to be there at the right time, through the right channel to engage with that person in the way that is most conducive to them and who they are and how they want to communicate.
Yeah, no, definitely. I mean, consumers consumers go to the least path of resistance.
Right.
As things whatever is the easiest is what they're going to go towards. And that's why things like Amazon has taken off, or GPSs on our phones. 20 years ago, if you would ask someone who had a cell phone, I'm going to put a GPS on your phone and track you. And I know this because I was in the industry.
Right.
The consumer was well and said, heck no, I don't want anyone tracking me on the GPS. But then 6-7 years later, 8 years later, when the first iPhone came out, and all of a sudden that GPS tracking on your phone gave you directions,
Right,
and gave you suggestions. And all of a sudden it became, sure, why not? Because it's convenience.
right.
Consumers are going to go to that path. So that's the same with the mortgage companies. Those that understand that the business is changing will thrive in the next 10 years. I'm a big proponent in the next 10 years is going to be a major differentiator in the mortgage industry. A lot of the players that are here today will not be here in 10 years, probably 5 years even. I think after this big refinance boom, those that don't understand the driving points of where consumers are going, they'll struggle.
Yeah, I think that's a great point. It kind of leads into this next sort of a two-part question, which is, what, in your mind, what does it mean to be a modern day loan officer? And along those same lines, what does it mean to be a modern day mortgage company, particularly with what you just talked about, how, the landscape is shifting. Right now we're in a refi boom, but that's not going to last forever. And in many cases, it's sort of like a feast or famine type of thing. Right now it's feast. But when those sort of leaner times come into play, how do you see things changing as far as what it means to be a modern day loan officer and what it means to be a modern day mortgage company?
Yeah, I think what we'll see after this is first for the modern day loan officer, you truly have to be at a modern day mortgage company to do that as well, right?
Right,
Because
of course.
so you have to have both. So they're kind of somewhat interchangeably, but a modern day loan officer is going to be really what I would say is a superhuman loan officer,
Right.
right? So how do we help them be as efficient and work on those things that are best and highest uses of their own, right? Give you an example. What's one of the areas that I would like to see in the next, several years to get easier and better is price and product and eligibility for loan officers. Still to this day, when I was a lender and we would train loan officer, we spend so much time just trying to explain to them how you can run a loan through Encompass, get DU to approve it, get the pricing engine to make sure it's correct, and then make sure that, and these little oddballs, is a 2-unit, is a 3-unit? Well, wait a minute, it's a 3-unit. Do I need the PUD waiver or not? All these little things, nuances, I think have become very difficult for loan officers and lenders. So I think in the modern world, along with, and I'll talk about technology as far as engagement, but just I think the back office is going to be one of the things that has to shift.
Right.
So that your loan officer, I'm doing what I do best, talking to my clients, understanding their financial dreams, their picture, understand what they need. And I'm able to come back to them and say, here's 2 or 3 options. And let me explain to you how option 1, you can take the 2% with no points. You can take the 1.75 with a point. I mean, these rates are unbelievably low right now, right?
Yeah, it is.
You can take, and here's the difference. If you pay the points, it's going to cost you $3,000, but it's going to, save you $50 a month. Are you going to be here for 60 months? Is that 5 years? That's a make or break point. That's what the modern loan officer really needs to be, is really consultancy. And then from a technology standpoint, it's always on.
Yep.
And I think that's where a lot of lenders are failing right now. Is our consumers want to interact with us when they want to interact with us.
Yeah.
Right. It's no longer, it has to be 9 to 5. If you're just a straight 9 to 5 mortgage company, you're missing out on business and you're going to lose in the market to come, because your consumers aren't buying 9 to 5. They're shopping for their homes on the weekends online. Right. That's when they're active in this buying process of a home and searching. So having been always on, being accessible. And I think one small way to show that is like, say, text messaging. We see that as a major challenge in the mortgage industry is text messaging. We don't have always on loan officers right now. So lenders struggle with a couple of things. One, either they don't have a text message platform to use, so they can't manage the compliance of it. Or 2, if they use a text message platform, it's not mobilely accessible, so it doesn't work. So the loan officers aren't always on. So we need always on, always accessible, and we need easy access to the data. We see. I was writing something up for our mobile product release that's coming out, and trying to figure out how do you show the value of it. And really the only picture that came to mind is show someone with a laptop at the dinner table and a cell phone, or on the side of the road trying to type into a laptop because they're trying to get an Encompass and they're using the hotspot from their cell phone and trying to do all this work. That has to change, right? All those things have to change. You have to have all your information accessibly, mobilely, easily. You need to have consistent data. That's another thing that, I know, Corey, you guys spend a lot of time with, this consistent data. Is a lot of lenders don't have consistent data. They don't understand that customer, A is refinancing again, or that they've lost customer A, or, the retention rates. Black Knight came out, I think it was 19% is what repeat business gets. So less than 1 in 20 consumers go back. Less than 1 in 5 consumers go back to the same lender. That's pretty poor.
It's pretty bad.
Yeah.
Yeah.
And that's service. If you give someone a great experience, why wouldn't they come back to you?
Right. Yeah. How do you see, one of the things that I'm hearing from you is just how you're talking about the level of engagement and the means of engagement has completely changed and continues to evolve and change through different mediums, whether it's like you talked about, however many years ago, 5 years ago, 10 years ago, text was never even really an issue of concern. Everything was done through email. Same thing with social media. That wasn't as much of a concern 5 years ago, and definitely wasn't really a concern at all, 10 years ago. So I think the thing that I'm hearing from you is making sure that you are using technology. One is making sure that you're using technology to work for you, not working for the technology, one. But along those same lines is making sure that you're using technology to engage at the right time through those right channels, which is one of the things that's great about you guys with the omni-channel marketing piece of things is you're able to do that at scale. And to me, I think that's the name of the game is engagement at scale, along with the other part where you're talking about data. You know, the way that we look at data is data tells this story, right? You can kind of make assumptions and guesses about a lot of things that are occurring throughout that customer buyer or customer buyer borrower, can't talk right now, the customer borrower life cycle as they're going through that process, and even from their retention and advocacy standpoint. But rather than speculating or making guesses, being able to dig into that data and having a platform that provides clear data in an easy to interpret way is really how you start breaking out the story into different chapters where not only do you know when to engage with them at the right point in that story, but you're also then you're able to start creating sort of these predictive models about, hey, this is where they're likely to be based upon a subset of data that matches other individuals that kind of fall into this segment of this individual over here. So along those same lines, what do you think are the biggest challenges that you see the mortgage industry and loan officers are facing right now? I mean, we talked a little bit about technology, engagement, text, social, a plethora of different things, but how do we navigate those challenges so that we come out on the other side stronger and better, particularly right now as we're going through COVID? You know, we're dealing with COVID right now. We're going through a refinance boom. So a lot of people aren't even adopting the technologies in the proper way because they are kind of in this feast sort of state of mind, right? So what are your thoughts on that?
I mean, so a couple of things. One is at the beginning when you're talking about the importance of timing and touch points.
Right.
So, you know, we did a study just to kind of give some backdrop of how important this can be. We did a study, a contact study, and we have data for it's going back as far as 2012, and we have, you know, thousands and thousands and thousands and thousands of transactions. This platform, our current version of platform that was released in 2017, has handled. It was released, I think, June 2017. Has handled 2.6 million borrower applications in the last 3 years. So we have a lot of data point, and before that, we had a lot of closed loans. We took a survey of like a contact strategy to see what phone calls made a difference in this life cycle of a loan. Was there any real telltale sign that could really drive to here's the best conversion? There's a handful of things we found that's built in our best practices, but one thing we saw was if you call disclosures, you send out disclosures, the lenders send out disclosures. On average, across our group, our lenders turned in 36% of the deals that they went out into disclosures. So retail, obviously retail, you guys probably turn in 80% because you're retail, but there's consumer direct. Some consumer direct is down as low as 20, some is as high as 50. So, but our average is 36. However, we did a study and it showed that if you called the customer 3 times in the first 24 hours of disclosures being set, those went to 79% return rate, over doubled it. And it was like, it was over 8,000 closed transactions. So it was statistically very valid. And it was like, wow, that's pretty impressive. We would never have thought that was a key point. I guess it makes sense. I'm disclosing, you have questions. I have to quickly help you with those questions. I'm at the decision point. If you're looking to buy, if I'm really there to help you and being engaged with you, making sure I can help you and answer questions, those are the ones that converted the highest.
Really quick, I want to interject something in there because I want to make sure that people understand something you just said, where you pointed out three times within the first 24 hours. And some people may be like, well, isn't that annoying them? And I think that the point that you made after that, where they're at a point where they're ready to make a decision. So they're asking for you to contact them. And I think there's a big difference between someone indicating, hey, I'm ready to talk and I need you to reach out to me, versus you just arbitrarily, hammering somebody 3 times within 24 hours. So I just want to make sure that I make that distinction so that from what I was gathering from you, and you can correct me if I'm wrong, that's how I understand is they're ready at that moment in time to engage. And so your persistence is desired by them versus a different point in time in someone else's journey where it may be a nuisance.
That's absolutely right. If we look at this, you're helping, if you're a loan officer and it's Thursday afternoon or Friday and you have a client who hasn't locked their interest rate in and the rates are wildly changing, it's your job to call that person and to at least explain to them, hey, listen, let me just tell you what the market's going. And A, it's your job. B, it's going to help you in the long term get more customers. C, it'll help you from upsetting this customer in case rates do change. Something simple. Hey, listen, I want to get those things signed in. The rate lock desk is about to close. Rates have been kind of wild. Tomorrow, if you call me back, I just want to let you know if rates change, I have to give you the new rate. I don't want you to think I'm trying to do a bait and switch. If it gets better, great. But rates are really low right now. Wouldn't plan on anything getting better. I'd only plan on things kind of going up a little bit. I want to make sure you got that. Did you have any questions? And to your point, they are in that buying process. So part of I'll just give you a quick little tidbit around this. Was my last venture was a People's Bank. People's Bank was out of Kansas and Colorado. Amazing bank. They're what we call it. We had guests. We didn't have customers. We had guests, and it was guest service, and it was really great. And we had this thing called the Grandma Test. And there was a very simple thing was, how would you want someone to treat your well-respected and revered grandma?
Yeah.
And that's how you should treat our guests. So you would probably want, if grandma's trying to buy the house and has questions, they need help. They want someone to be responsive. They want to know that you're actually there and ready and willing to help them. You're not, to your point, you're not annoying them.
Right.
Like if you all of a sudden call someone 3 times on day 7 of them just inquiring with you, that could potentially annoy them. But this is around when people they have questions. They're looking at documents. They have a question, then they call you, you call them back. They may not even call you. They may just think about it. And then you call them. Great. I'm glad you called me. I was trying to figure out what this all meant. I was online looking up what a closing statement is, and I don't understand this. And, thank you for calling me. They're paying you for that service is really what it comes down to. That's what we get paid for, is to actually do the communication part. The loans are commodity.
Yep, absolutely. So how do you see the customer borrower journey evolving as we continue to move along? And how do you think that we can best engage those borrowers or those leads from that awareness, attention, interest, decision, and advocacy standpoint? I know that's something that you guys do extremely well, but what are your thoughts around that?
So first, one is data alignment. I think a question I asked early, how do we do that? One is making sure you have aligned data so that you have a consistency. Second is be where your borrowers are. Don't make them to choose to be where you're at. And every borrower has their own thing. I have customers that are lenders, and some of them I've been in this industry for a long time. I have friends I've known for 20 years. I have a lot of people that I went to high school with that are in the mortgage industry and runs mortgage companies. And it's interesting, even when I communicate with some of my friends and my customers, some of them just won't respond to text when it comes to business with me. And it's really strange. We're like close friends, and they'll only respond to text when it's an email, which is strange. But then I'll get a text like, hey dude, what are you guys doing this weekend? It's like, It's okay. But on a social level, they're totally down to work with me in text. But when it comes to business, there's just no response to text messages.
Right.
And so I had to adjust. Oh, okay. They want me to email. I have to email him. I can't, when it's business, and I get responses in seconds. Right. When I email them I actually have several clients that are like this.
Right.
That are like a social thing, text works, but then in a business thing, I can't get a response. It's just like, no, that's business.
It's not their preferred method. It's like something switches in their brain for how they communicate.
That's right. Our guests are the same. Our clients are the same way. Your borrowers are the same way. Right. So you want to be where they're at. So make sure you can communicate and one of that ways is, again, text messaging. That's 97% text messages are looked at within the first 2 minutes. It's the most highest responded to form of engagement and communications there is. So when you're in that interaction, think about the process. If I'm texting you, hey, Corey, I'm about to make an offer on the house. Do you think you can get me approval up to $500,000? You think would that work? They send that text to you, and you're, Saturday walking the dog, and that person's right there, right then. They're like, I'm buying, right? So this thought of buy, you have to respond to them then. So that's their way they want to communicate with you. They're not calling you. They're not emailing you. They're texting you saying, respond to me now. Make sure you're in a place to respond to that person right away. Right. Yeah. How do you, get back in front of that person? They tell you and communicate where they want. Facebook, people that are in Facebook, some people are on Instagram, some are, TikTok. I don't know how it's going to affect the mortgage industry, but we have to understand that's relevant.
Right. If it sticks around here, I know they're talking about trying to ban it, or Microsoft trying to buy it right now at this point in time. It'll be interesting to see what happens.
Yeah. But we have to understand that those are relevant things. Right. What we know about time is it keeps on going. Yeah. The younger generation becomes the middle-aged folks, and it consistently changes, and those will have to be relevant. So understanding to be always on, and then And that could be as something like, I'll give you an example of inbound call routing or call routing. So a lot of lenders right now, we've been helping lenders who have their loan officers at home. We can we can provide inbound call routing through our system. What does that allow someone to do? Well, if you're a lender and you need to route leads based off of state licensing or area codes, you want to make sure that people are calling in from Texas, talk to your Texas loan officers, and all your loan officers be on different phone systems. They don't have to be on one phone system.
Right.
It's the technology to integrate that so that, again, your loan officers can always be on. Right. So if they get a call, it can go to their cell phone or their desk phone. Our platform helps lenders do that. And then the text messaging, and then it's just the social things. Hey, show up in email, show up in Facebook, Instagram, show up in Google AdWords, show up in direct mail. A lot of people overlook direct mail. Direct mail is an unbelievably powerful marketing source.
Yep.
And there's this great mix of digital touch and non-digital touch through direct mail. I've had the experience through Amazon myself. I got an email, or not, I got a letter from them about 2 years ago in the mail. And I'm like, oh, Amazon, they're sending me a piece of direct mail.
Right.
I'm going to open this. Opened it. Really, really simple letter, one page. Hey, dear Josh, you're an Amazon Prime member, and we've noticed you've never logged into Amazon Prime Video. It's free with your Prime membership. Here's 2 or 3 great shows we think you would love to watch. Here's how you can log in. Let us know if you have any questions.
Yeah.
Really simple. I actually logged in Amazon Prime that day for the first time I ignored all the emails because I've definitely got emails from them. I'd gotten banner ads from them. I got all these other things from them, but then for some reason that physical touch connected it for me.
Yeah.
So, and everyone buys differently and not the same way every time. So it's really about, how do you show up where they're at when they're looking for you?
Right.
So you're there and you're relevant, you're in front of them at the right time. And that's going to be what's exciting about technology and the mortgage industry and data analytics. This is just getting better and better, where you're predicting when someone's about to look for a loan, right? You can start figuring out, hey, these 1,000 people, 500 of them are about to buy a new house in the next 6 months. There's analytics that show you those types of things. So you can look at your database and then communicate with them. So that, I think, is going to be, a big part of the future of the mortgage industry, is just understanding the data side of it.
Yeah, no, I think that's a great point. I think one of the things that a lot of people forget is, depending upon where you're looking at, takes anywhere from, a lead anywhere from 7 to 11 times of touch points to actually make a decision, right? So it's kind of one of those things. That doesn't mean that gives you license to just hammer them over and over again. But I think, to your point, it's understanding how and where to communicate with them, which is what we keep going back to. And then the other thing that I've heard you consistently saying as we've been talking is just how no longer does the company own the borrower's journey. Now the borrower owns the borrower's journey. And what I mean by that is through the means of how they're communicating, when and where they want to engage with you, because there are so many other options that are out there, whether it's other lenders or other means of communicating, whether it's through social media, direct mail, email, text, ringless voicemail, phone call. Like, there's all these different things where it's essentially for them now, they're at a point where, back in the day, at the beginning stages of maybe the internet or even pre-internet, it's like the companies are the ones that own the borrower's journey. They kind of are the ones that dictated a lot of it. And now it's sort of flipped that on its head. And I think that's one of the things that people have to recognize is the way that they develop their systems is not trying to develop their system or their level of engagement or their means of engagement the way that they want to do it. I think going back to the data aspect of it's understanding the data of how these different segmented audiences that you're kind of marking or segmenting out, how they choose to engage, and then tailoring your experience around them. Sometimes what I've seen is people be like, well, this is how I think it should work. And it's like, well, you have a roadmap over here. The data is literally telling you what needs to take place and when it needs to take place. And there are things you can kind of tweak within that. But it's kind of one of those things where it's recognizing that really the power is in the borrower's hand and meeting them in the middle of the road where they want to be met at and how they want to be met at.
Yeah, no, that's really good. No, I think you're absolutely right. The borrower does control their journey now. And I think what you're saying that is, there's the desired,
right,
the desired path, and there's the reality of the path.
Yeah, absolutely.
Right. It's what you think it should be versus what it really is.
or what you hope it would be, and you kind of stick on that path.
You hope it would be. I mean, it's, that's exactly. So you have to just accept the reality of what it,
Right.
first, what is, they do control their journey, and part of that is, to your point, before all this technology in, 1990, I'm a consumer. How many access points did I have to get a mortgage?
Exactly.
I didn't have. Right now,
you're going to the office, basically.
That's right. I walked into the Bank of America branch. I might have had one broker who was a referral from a real estate agent, but that was like my access to who I couldn't read reviews. I couldn't compare pricing. I was limited. And today that's not the case. I mean, we have an absolute commodity. That's what we're selling, right? We are selling a commodity. The only differentiator is the service lenders provide.
Yep.
Right. So the service the lender can provide is a differentiator between the commodity that they sell and they buy from anyone else. And as to your point, consumers know this now.
Yeah, no,
right?
I totally agree.
So they do control their journey. They want to buy when they want to buy. They want to interact when they want to interact, and how they want to interact. And lenders have to your point, allow them to. You have to have the flexibility to do it any way that they desire.
Yep.
Right. Someone said I'd rather be rich than right. So you can have your desired way you think it's going to be, but then just deal with the reality and figure out how it actually is, and then just adjust to that.
Yeah, I think that's the importance of the whole omni-channel marketing, is that's really focused around those levels of engagement through the means that they want to communicate or interact with you through.
Yeah.
So that being said, what do you think, or what do you see as being the biggest change that we've kind of seen? Obviously, again, we've gone through COVID now, or we're still in COVID, all of that lockdown stuff. I know you've kind of seen the whole gamut from where it was, less technology to being an actually technology company now, and being able to do some really cool and interesting things. What do you think the biggest changes that you've seen in the past, we'll say 5 years, or you could even go with the past year, because there's been so many crazy changes? What's the biggest changes that you've seen? How do you think that impacts us moving forward?
So I think a theme or change I'll say that I've been noticing, and it's first, it actually starts with that there hasn't been much change.
Right.
I mean, and when it comes to, technology and how we do this business, it's still been very much how we've been doing it for 20 years, 30 years. Like, Ellie Mae, which is the leading LOS system out there, some of their platform is built in the 90s, right? So they bought different systems and put them together, and some of those systems are from the 90s, early 2000s. And obviously they're a great company because they provide great service, and they have tons of lenders that use their platform, but that's all technology,
right?
And I think that the theme has been kind of where the change is there is now this view from outside the industry. It really came from outside the industry of, hey, listen, this is an industry that has lots of money. Let's bring some technology in here, and let's make them better. That hasn't fully worked because our industry is so intricate that if you don't understand the moving parts of regulation, dealing with lenders, warehouse lines, banks, all these different things, it makes it very difficult sometimes to figure out how to make that technology fully work. But I think that's where, I've been noticing the changes. We're seeing more money being spent there. We didn't see money being spent more in technology for a long time, because after the crash in 2006-07, who was spending money more as technology?
Right.
There was one person. You know who that was? They're called Quicken.
Yeah.
And they spent a lot of money, and now they're
a little bit of money, just a little bit, not a lot, but just a little bit.
Yeah, and now they're the nation's largest lender.
Yep.
But what I can tell you is what technology can do for a lender, because you can see what it's done for lenders in the past. But I think that's the theme we're seeing is we have a group of lenders that are jumping on, saying we want to go after, like you guys. Obviously, ACM, you guys are very tech forward. You guys use a lot of different technology, and you guys are trying to find new technology. I know working with your team, you're demoing new stuff. You're always understanding what's going out there. The truth of it is that's like 5% of lenders are there.
Yep.
Most of them are still just, especially right now, are like, hey, I'm making so much money.
Right.
What I do. And maybe that works for them, because the average age of a loan officer is, I think, it's 57. So, most of these people are going to, a lot of people are going to be retiring in a couple of years. And after a year or two, the money they're making, they probably can retire. So that may actually work out really well. those people that don't want to adapt and change can make this last big bit of money for a year or two, and then, retire well, probably. So I think we're going to see what we'll see over the next 5 years is the separation of tech forward driven mortgage companies. Because when these margins get compressed, and they will, and the cost to close becomes important, because your cost to close will go up because you're going to be closing more loans per person across your infrastructure. If you can't be efficient in there, and technology is going to be it's the only way you can pick up efficiencies at this point, because there's great processing managers, great processors, people can drive a hard ship and get things underwritten, but there's only so much of that you can do.
Right.
And then
there's no manual intervention that's required throughout the whole operations piece of it.
Yeah. So you can't. So until technology comes in, and that will radically change this industry, and it is. And I think we're applying this technology right now in the most forward place, which is going to be engagement with consumers. Right. We really want to help lenders engage with, manage, track, keep in touch, stay in front of, drive repeat business, really give that great customer service, and show up in the right places at the right time. You'd said that, listen, if you talk to me today as a lender, and most consumers don't know that many lenders' names. I mean, if you ask a consumer, name 5 big mortgage companies, they probably would struggle, right? They don't know the names, but they know they're out there.
Right.
They just don't know who they
how
are.
to use Google.
Yeah, that's right. Yeah. But if you show up and I talk to you today and we have a conversation, and then later today you go into your Facebook feed, and all of a sudden an ad from Atlantic Coast Mortgage pops up in my Facebook feed. Wow, they must be kind of big. And then maybe the next day I see something in Instagram, and then a few days later I get a great piece of collateral email from you that talks about buying a house, and maybe a piece of direct mail. Maybe you find me in Google AdWords. So you can actually reach out to me through Google AdWords, and I'm playing, and I know this works because we do this with Insellerate. A little secret how we do some of our marketing, but we do a lot. We're very, very, very digitally focused. Since we launched our new engagement platform since a year ago, and we've been using Insellerate, my website traffic has gone up 719%.
Wow.
And that is because we're using the retargeting, we're using the Facebook stuff, we're using all these different tools we have inside Insellerate to make sure we're driving those people back to your website. So you can do that. You can go up on Google. We actually, you may potentially play a video game on your cell phone and see an Insellerate ad.
Right.
So
Well, now
there's
that we're talking about it, we already know that Apple's listening, so I'm sure we're going to get something.
That's right. That's right. So that's the kind of reach you that's available right now.
Right.
And I think that, and it's not, what's crazy is it's not expensive. It's actually, it's cheap. It's actually free because it makes you a lot of money. First, It's actually financially not a lot of money in reality. And then in the actuality, you're going to make 10, 20, 30 times your money on that, because all of a sudden, if I brand with you and I show up in all these places that you're at, and I think one of the things is distinctions when we talk about when it comes to Facebook, there's a lot of platforms that do Facebook. What that means is it lets your loan officer post on their Facebook feed.
Right.
Great. If your 300 friends is your marketplace.
Right.
But your 300 or 500 friends is not your marketplace. The 300 million people in America is your marketplace. So we do it differently. We actually put them in custom audiences. So whether or not they're following you, you can create an audience dynamically with names, email addresses, and so forth, and actually market to those people, whether or not they've ever seen you. Same thing with Google AdWords.
You're actually leveraging Facebook Ads Manager is essentially what it is.
Yes.
Versus just auto posting.
That's right.
Yep.
So your actual ad campaigns, huge difference, right? Because now I can reach out and touch 300 million people potentially versus the 500 in my Facebook feed. Very different. So, that way I brand it. You can do it where someone goes to your website, you can track them, put them in there's so many bits of technology you can do right now digitally. And there's some lenders that get this. The great news is this, and this is something that I when I've ever been in business, I've always said this. When you can look in something and uncover that there's so many more things you can do easily, you should be happy and excited.
Yep.
Because if you're making money now and things are working, or, even when things are barely scraping by, if you can't figure out anything else to do better, then, you're screwed. Exactly. But when you look at this and go, oh my goodness, these lenders are missing. There's probably 20, 30% of business that they're missing right now because they're not doing stuff on, digital retargeting and understanding this thing, which is great. They're doing great now, but that's uppick. They're everywhere around you look. There's so many places to pick up more business right now. And the ones that do this effectively, and there's, like I said, Corey, you guys are one of the few people that spend a lot of time in technology. A lot of lenders don't do this stuff very well. They don't, because they relied on a retail loan officer who had a relationship, who had a book of business, who could turn loans in.
Right.
And that's changing.
I think something too that I've noticed is people will use technology just for the sake of using technology versus using it to actually solve a problem and have a vision for how that piece of technology actually fits into their overall technology stack to create a more holistic system, right? And that's one of the things that I feel like for us that we do great. And I know the conversations that you and I have had, where that's how we approach anything that we're using, where it's like, how can we marry this with everything else that we have, and what problems is it solving now, and then what opportunities is it presenting in the future once we solve those problems. And I think that you guys do a great job of that. One of the things I wanted to touch on that you had mentioned is, a lot of people are technology focused. So a lot of mortgage technology companies are technology focused versus what I heard you saying, which is you are engagement focused. So you are a technology company that is engagement focused versus being a technology company that is technology focused. Does that make sense? I know that's a little bit of a mouthful.
No, it does. That does make sense, because technology is just a tool.
Exactly.
And so if it's for technologies, there's so many great people. I've been a computer programmer since I was, I think, 12 years old. You can see my little plaque behind me for I keep it up for my junior high computer programming excellence award, when I was 12 years old. And there's lots of great technology for technology's sake. I mean, amazing technology, but you have to solve a real use case and a real business need. And it's not, wow, this thing can do all these wonderful things. It's like, wow, that's impressive, but what the hell does that do for me? I mean, how do I in real time, in real practical world, implement this? One of the reasons why, we've had, I think, great success with our platform is the foundation Accelerate was never built to sell to other companies. That was not what the product was. The product was an evolution of software I've been using for years. And when I joined People's Bank and brought my mortgage company within there and became a shareholder of the bank, we needed more technology. We had used some off the shelf. I won't say the name, but our biggest competitor, we signed a contract with them. And in 2012, we never rolled out the software because it wasn't good. And I said, all right, listen, I have to build this again myself because this doesn't work. And when we built it, it was a use case.
Right.
It was, hey, so I have leads coming in. Yeah, I have this coming. Okay, how do we solve this? How do I solve this in real time? And I had this incubator lab of a mortgage company. So if I wanted to see how a loan officer interacted with the system, my lead programmer sat in the sales floor for a year. So when they were trying to figure out, how to why don't they use this button? Why aren't you using follow-ups? Why, they could actually get real-time input.
Right.
And to the earlier thing we said, we can deal with reality or what we want the reality to be.
Right.
And that was a great lab to break that down. So, and what's interesting is there's reality on both sides, the reality of the user, what they think it is and what it really is, and the reality of the technology provider, what they is and what they think it is. And so we would find this interesting thing of loan officers say, listen, we really need this feature. If I had this feature, we'd all use it more. And so we'd put it in real time. Here's this feature, we give it to them. And then some of those features would never get used ever, not once. Right. And it was like, it really wasn't the one feature they wanted. So you had lots of trial and error. What features they want. And if you're not scheduling follow-ups, and we can say, well, they're right there, it's easy to use. I can continue to tell people that, or say, obviously my reality is wrong. Right. It's not easy to use because they'd use it. Yeah. So let's move it, let's change it, and let's make it whatever their reality was. And that's what we did a lot with software. And that's how technology needs to be developed.
Yeah. I think it's a classic case of, I see this a lot too, of majoring on the minors and minoring on the majors, more or less. You see this little shiny object over here that may not really have that big of an impact, at least not until you get this foundational thing over here taken care of. But this is shiny and it looks fun, so I'm going to focus in on that. But then, once you build that in, or once they get that thing, it's like, I don't really need this. I actually need this other thing over here. It's like,
that's right.
I know. I'm trying to help me help you.
That's right. That's right. It's like,
Um,
yeah. What do you, people think they know what they need, but none of us are always right when it comes to that. Right? There's things that we, that's, we don't need. I've seen lenders make decisions on technology over some really strange feature sets. And it's like, wow. Or a lender, that's the one thing that makes my business successful, is this one feature that I'm able to do. And I go, dang, I've never heard of another lender ever do that. And they're all successful, but if that's what you think makes you feel successful, then that it feels, let's help you do that. But it may not be the truth. You're successful from all these other reasons. There's a lot of things else that you're doing.
No, that makes total sense. And for me, one of the things that I continually try to implement, and even with my team, I have them do this as well, where I tell them, ask why at least 3 times. At least 3 times. So I try and do it 3 to 7 times. It's like, oh, why do you need this? Well, I need it because of this. Oh, that's really interesting. Can you explain to me a little bit more, like why you need that or how that helps you? So being able to dig down deep, and what we've found anyways from, our own loan officer side of things, is the thing that they were asking for, they may not even really, they know conceptually the problem they're trying to solve, but rather than focusing in on the problem, saying, hey, here's the outcome or the goal that I want, instead what they try and do is tell you what they want versus focusing in on the outcome. So what we're able to do through that process is go through that discovery process. And, as an example, it's like, they say they want a postcard, but you go through it and then you realize, oh, what you actually want is a digital flyer, or you want to create an event thing or this, and they're like, oh yeah, that's what I want. And so I think it kind of goes to the point where it's not taking people at their word, and not in a negative way, but it's trying to go back to what we've been talking about. How can you provide the best possible service? And I think that's something that you guys do really well. And I want to piggyback off of that by outlining the fact, or highlighting the fact, that I know that when you and I had a conversation the other day, you guys are pushing out updates every 2 weeks, which is, that's a pretty crazy release cycle that you guys are doing. But I think it speaks to what you were talking about earlier, as far as being able to pivot and move fast, and creating a platform that's designed around engagement, not the actual technology itself.
Yeah, no, that's good. And you guys do, you do that well with your team. And I like to ask why 3 times or, or more, because, and that's really, and, I tell my team when we're dealing with our lenders that part of our job is to be a detective.
Right.
In a good way.
Yeah, exactly.
Let's understand, like, I need to understand your business. We need to understand your business, so that way we can prescribe the right solutions. And to your point, you said people, they focus on the feature, not the outcome.
Right.
And I think that's great for lenders to hear. I really like that, because you need to focus on the outcome, and the feature set is just, there's 5 ways I could drive from here to New York City right now. Probably more than 5 different ways.
Yeah,
right?
absolutely.
There's a lot of ways I could create a restaurant. I can make a hamburger a lot of different ways, right? There's a lot of ways to make this all work.
Well, so depending upon the money you have too, you can fly, you can take a train, you can drive. Like,
that's right.
So it's not even that there's just one path. There's other modes of travel to get to that path. Some that may be quicker but require more money. So
that's right. Yeah, that's right. So there's, the end goal is, I want to be able to engage with my real estate agents and their customers, so they know what homes are for sale. Okay, that's what you're really trying to do. So how do I get you there? And then from that, we come back, because sometimes your point is, we uncover the first request doesn't actually fill the need either.
Right.
It's like, oh, well, wait a minute, I also need to do this, and I also needed to do this, and I also needed to do this. So when someone comes and says, I need this feature set done, the question is, okay, why? Be the detective. What are they trying to solve? What are you, what's your desired outcome? And I think, in planning, I think one of the things that's helped us as a technology company, and as much as we, I say we're not a technology company, we're in the business of helping lenders close more loans. The truth is, our technology side of our business is very strong. We are a very solid, professional technology business. The ability for us to do 2-week outputs every 2 weeks, do updates, and have a consistent schedule like that. We have a very well-run machine. But is on the technology businesses, it's not just, it wasn't just about the technology. It's just about how do you serve your client better and easier, and how do we do that as for our lenders, and how do we interact with the lenders, understand what they're asking for, and how do you mirror those 2 things together?
Yeah. No, that makes total sense. So I know we're getting near the end of our time together. So I just got two final questions for you. One is, what's the biggest mindset shift we need to take as loan officers or as lenders?
That the market is changing. Like, I think that's the biggest mindset, that after this refinance boom comes through, the other side of it, the players that survive over the next 5 years it's going to change. I think we have to look at COVID has done nothing but speed up the need for lenders to be able to interact with their customers online, offline, digitally,
Yep.
and coordinate all that. And so some very simple things, like there's lots and lots and lots of lenders out there that don't have simple things as like lead management.
Right.
Someone applies on your website, it may go to your CRM, and maybe someone gets an email that they should call someone.
Right.
That's horrible. That's still being done. Our MBA study, we have had 4 years of a study where each year we contact about 1,000 mortgage companies. And you go to our website, you can see these study results and to see if they respond to us. In those studies, over 50% of lenders we go to online never respond to a lead, not one time. And then the people that do and the people that do respond, the average response is only 1.3 responses per lead. When we know, as you said, it takes 7 to 11 touch points to convert someone, right, and the average lenders did 1.3 times. So the mind shift is the market's changed, and if you don't jump on board of it, that you'll lose out in 5 years from now. And that's the same from the loan officer. Yeah. Hey, I get disciplined. We use Insellerate and sell Insellerate. That sounds weird, but we use Insellerate to sell Insellerate, and the discipline of making sure I'm using the platform. And after I get done talking to a customer or a client or a prospect, on my mobile phone, put it in a note. That little discipline that I put my note in there, right, allows me to go back and later know what's going on.
2 seconds, but it makes a huge impact.
Massive. Yeah, 2 seconds. It's usually, that's what most things, it's what I found in life. It's usually the last like 5%. Yeah. Just a little extra. You spend 30 minutes cleaning the room, spend 3 more minutes making sure the bed looks perfect and it looks all that different, whatever it may be. It's usually just the little things that make the biggest difference. And it does. 2 seconds, and now I have a huge impact. With that discipline, loan officers use that discipline. And what's great with technology, you don't have to do as many manual processes anymore. We're talking about like put a note in, like, put notes in is what you really have to. The rest of the stuff is just going to run for you, but make sure you use and make use of the technology and learn, like, don't be afraid to learn something new. And once you learn it, the stuff's easy. That's the great thing about technology today. It should be easy to use.
Once you develop that habit, it makes it really easy just to you don't have to think about it anymore.
That's right. Yeah. You have a routine, there's no mystery to how this all works.
Right. Yeah. I mean, what I'm hearing is adapt or die, basically. I mean, and the shortest possible summarization of that, it's like adapt or die. You have 2 options. It's up to you. Nobody can force you to do it. Adapt, start learning these technologies, or you are just going to become irrelevant. I don't want to say die, but you're going to become irrelevant. And you're going to get taken over by other people that are intelligently using these systems that are at their disposal to their advantage. So that makes total sense. So final thought of the day, Josh. If you could leave people with one lingering thought in their mind for our loan officers, mortgage lenders or marketing teams, what would that final thought of the day be?
Ooh, final thought of the day. I think one is prepare. I guess I'll combine it with like this: prepare for the future and spend time now understanding. If I can give any lenders a really good task to do or thing to do, go to a whiteboard, grab some markers, and start whiteboarding out the journey. Yeah. Your customer from the very hello to a funded loan. What are the touch points? What systems they interact with? Where do people die? Where are their bottlenecks? Just get a picture of currently what it's like. You don't have a physical store where people are walking in lines buying things, but in theory you do. So get that physical picture so that you can arrange your store and the lines the easiest and the right products are at the front of the store so they can, buy the goods as they walk out the store. Look at your company in that regard so you're able to design the workflow like that, because that's what does happen is you have your customers are coming to a virtual store interacting with you from start to finish, you need to see that. I think that's probably one of the biggest things. So that's what's going to propel lenders to say, all right, so for the future, if that's the case, then these are the things I need to work on.
Yep.
Right, here's the bits of technology I can put in place to make this all, tight and uniform.
Yep. No, that makes total sense. All right. That's the final thought of the day. Josh, thanks for tuning in. Thanks for joining us today, sharing all the information to help all of our audience out. To everybody tuning in, thanks for checking us out today. Again, Josh, thank you. We look forward to catching you next time. Hope everybody has a great rest of the day or evening, whichever is applicable to you. And we'll catch you in the next episode. See you, Josh.
Thanks, Corey. I really appreciate it. Have a good day.
See ya.
Bye.
Hey, really quick before you go, if you enjoyed this content, be sure to follow us here on social and don't forget to like and share this content. Thanks for tuning in, and we'll catch you in the next episode.